early in June, we got some clarity around potentially the future of crypto taxes through the Lumis-Gillibrand tax bill that's been going through Congress. So basically, some of the big updates in here would be a de minimis on crypto transactions up to $200, meaning, right now there's so many people out there that have just transaction after transaction that are microscopic in terms of value. Well, basically, unless it's equivalent of $200, you wouldn't have to pay taxes on those different types of transactions. So that's basically going to give a relief to a lot of crypto users out there, and especially on those smaller transactions. The other big thing on here is for anyone that participates in staking. So staking is, if you're not aware, is basically when you essentially receive interest in crypto, but you're receiving it in the form of more cryptocurrency. So you're basically putting your property up to stake and then getting more property in return. So originally it was viewed as staking returns were interest income, or basically were just income on your taxes. But there's been a case over the past year that has essentially said that no, that's not the case. You won't owe those taxes until you actually sell the staked earned crypto. And so, like, for example, the kind of analogy that's been used is like you wouldn't tax a baker when he bakes the bread, you tax it when he sells it. So that's kind of the same concept here, is that basically you aren't getting taxed on those rewards until you sell that crypto. So those are two big major changes that are potentially going to come out of this bill. Something that is definitely worth keeping an eye on for the future if you're doing any sort of crypto transactions.